Hello family, hopefully each and every one of you is doing today on 6th of May 2025. I sent this chat earlier and I want us to, as always, say something of this chat and maybe you can learn something. When you look at this chart, we had a price moving lower, and on Thursday last week we had a reversal. How we confirmed that that this was a reversal, we had a sell side sweep. That was SSL. Sell side liquidity was taken. Then price closed above this zone here. Then we had what? Our market structure shift, MSS. See that? So top left, and clearly the last up close candle before this liquidity was taken, this candle here, you see this, that is our breaker. So we have a low, a high, a low, a low. So the last up close before the sweep of liquidity, when price closes above, that is market structure shift. If you look closer here, what is that? That is an FVG. So we have a breaker and an FVG there. Then this is on when price is now coming back to this zone. Remember we said for the best case scenario, we want this fair value gap, 50% of the this fair value gap body should remain above the 50% of these fair value gaps. And even after retesting again, you see what happened. Price went higher. My eyes are on this high here. That is my buy side liquidity. But remember, as always, I'm not waiting for price to go all the way up there for me to get my profits. Now I want to zoom in here because this is where I want you to see something. Now if you want to know how my entry was framed, I want you to study this price action here. I've been saying once price has left a key level, more so a fair value gap, the down close candle from the fair value gap, when price closes above, that becomes an order block, and that is the high probability order block. You see that? That's why you're seeing when price is rejecting this order block, you see once, twice, and then gravitated higher. We haven't reached our zone yet, but I feel that we will get to that zone. So I left out when price closed above this liquidity there. That is enough for me, and it was a quick run. But now let's go behind this and find out what exactly. So when price closes above here, when you draw your order block there, go to a 15 minutes chart. You see that? See this one. So this is our order block here. Okay, now in a 15 minutes chart, I want you to study something here. We had another minor sell side sweep into what? A key level order block. If you close, you draw this line across, you see price rejected that order block and started to gravitate higher. When price rejected this order block, you see there is nothing really good the moment from this one that I could have worked in. So unless I was to be patient enough to wait for price to do what? To go above that inversion fair value gap. So we are reacting from a lower time frame key level and a higher time frame key level. We have a minor sell side liquidity swept there. Then we have what? Price now starting to go high. Now if you look at this pair keenly, you realize the same thing that I told you yesterday. This is on Monday midnight open. So you see price goes higher once more, takes out these highs, comes down, takes out this low, and then now starts to gravitate to our take profit. That is purge and revert. So this was not a reversal. Remember, from higher time frame, I had already hinted you on that chart that I sent that I am bullish to this zone here. Okay, so this, taking this as an idea to sell is not something that you could have done. If you did so, at least you can learn from that. Okay, now I did not get an entry, a good entry here in 15 minutes. So I had to zoom into 5 minutes, and I want you to see something here now. In 5 minutes, trying to zoom in. Good. So in 5 minutes, you see we have sell side taken, the last down close candles here. When price closes above, that is an order block. But I did not still get in here. I wanted to see price close above this 15-minute inversion fair value gap. The moment it closed above, okay, price dropped lower to what? Did you see that? This is an FVG there, okay? So what then? Then how do I enter from this zone? Let me zoom in here because this is what is important, okay? So we have a key level here. Then price has come down to another fair value gap here. You see that? Good. Now, how then do we get an entry? So I'm saying when we're dealing with fair value gap, wait for price to close above that down close candle. If you are buying, when price closes above this down close candle that is coming off the fair value gap, that is now the best entry zone. Look at this one here. So when price closes above, it forms what? A fair value gap. If you're keen enough, you realize that all these were possible entry zones. So the first entry, second, fourth, fifth, all the way sixth entry, and then price started to do what? Hey, to pump higher like that. Did you get what happened here? This, you see this that I've said here, repeat again and you'll see the logic behind what I'm actually trying to say. Okay, but now of course it's time then price. Okay, let's check this out. So we had a confirmation during London that we are going higher, but we can turtle soup, we can use that as an order block, but I had to wait for this 15-minute IFEG to price to close above it before I started to think about doing what? Taking price higher. You get that? So London low of the day, New York continuation. That is a classic buy day. You get that? All I want, the objective of this video is to still continue to clarify that when you are coming off a key level, wait for price to, the candle that went into that key level, wait for price to close above it. That is a very clean order block. You see all the bodies remained above the 50% of this fair value gap here. Then from there, price had a very smooth and very nice run higher, exiting up there. I didn't actually wait for price to go all the way higher because that wasn't my objective. And you've learned that I don't wait for price to go all the way higher. For price to do what? For me to exit that price. Reason being, you need to not to be too greedy, but just accept what the market offers. So we have an aggressive entry here, another entry there, another entry there, and then price goes higher, comes back once more, pumps higher. The last down close candle, that is what? Order block. We also have an inversion, fair value gaps, goes higher, comes back, fair value gap, last down close candle before this move up, order block, and then so you have the first entry, second entry, or the third entry inversion, another entry here, another, all these ones were entries, going above, another entry there, going up above again, coming down, order block, fair value gap, and then all you see that fair value gap, respect again, then price pumped higher. So what I'm trying to say is always see this move is enough here, but if you want to wait all the way up to there, then ensure you have trade your stop loss or you have taken partials. Okay, and when you feel like the market has awarded you enough, you don't have any reason for you to continue staying in that market. So this was a very nice run, very easy run to just end your day on a Tuesday. So hopefully you saw something there, and always don't be too greedy. Just exit when you see something is enough. Just either exit or trail your stop loss. In short, pay yourself. It is very, very important. So hopefully you found some simple insights here which can help you build up on your understanding and growth as we continue to grind in these markets. I wish you well. Until next time, be safe.